SpaceX is now public. A company that once felt out of reach for most regular investors is now sitting inside a brokerage app. For years, people watched from the outside rockets, satellites, Starlink, Mars, and one of the most followed business stories in the world. The story was everywhere, but the stock wasn't. Then the IPO arrived. SpaceX priced its shares at $135. But when the trading began, the stock opened at $150. And that gap tells you almost everything about IPOs. A young investor sees the headline, opens the app, and thinks, is this my chance to get in early? But then the question changes. Not can I get in early, but why do I already feel late? That is the strange thing about IPOs. They look like a beginning, but often they are a handoff. The private market builds the story and the public market receives it. An IPO is when a private company sells shares to the public for the first time. But it doesn't work like everyone enters at the exact same moment. Before the stock starts trading on an exchange, a lot would have already happened. Investment banks help set the price, large investors are shown the deal, demand is tested, and shares are allocated. The company, the banks, and the major investors are already inside the process before most people ever see a buy button. So when the stock appears on your app, you may not be buying at the IPO price. You're buying at the opening market price. And those can be very different. That gap matters. In SpaceX's case, that gap was easy to see. $135 at the IPO price and $150 when the public trading began. So when the headlines say that the stock jumped, the average person buying after the open didn't get that full first move. The biggest benefit went to the investors who received shares before public trading even began. This is why IPOs confuse people. The stock might be new to your app, but the company isn't new to investors. By the time a famous company goes public, early employees, venture funds, private investors, and institutions may already have years of exposure. They took earlier risk, they entered when the company was private, and they may have waited through uncertainty, losses, delays, and failed expectations as well. So it isn't simply unfair. The system exists for a reason. Companies go public to raise capital, create liquidity, and give investors a clearer market to buy and sell shares. Early investors want an exit. Employee may want their paper wealth to become real money. Bankers earn fees. Institutions want success. And the media wants a huge story. And retail investors? They just want to feel like they aren't missing out. That last part is where personal finance begins. Because IPOs aren't just financial events. You don't just see a ticker symbol. You see years of headlines. You see a founder, a rocket launch, and a version of the future people have been talking about for years. And when that story finally has a price, people want to click fast. But a famous company and a good investment are not the same thing. A company can be impressive, its product can be real, its mission exciting, and its brand powerful. And the stock can still be expensive at the price you're being offered. That is a trade off people miss. Public access doesn't always mean early access. Sometimes it only means the public is finally allowed to buy after the private market has already captured years of growth. This has just changed over time. Many companies now stay private for longer, private funds are bigger, late stage investors have more money, and employees or early shareholders can sometimes get liquidity even before an IPO. So the public market is no longer always where the story begins. Sometimes it's just where the story becomes available to everyone else. That doesn't mean IPOs are bad. Some IPOs become great long-term companies, and public markets give regular people access, transparency, and liquidity. The point isn't to avoid IPOs. The point is to understand where you are standing in the timeline. The better mental model is simple. An IPO is not an invitation to be early. It is a price discovery event. The market is trying to decide what this company is worth now after years of private growth, private funding, private risk, and private reward. So when a famous company goes public, the smarter question isn't, do I like this company? The smarter question is, what price am I paying for this story? Because price changes everything. At one price, a company can be an opportunity. At another price, the same company can be an expensive dream. That is what IPOs really reveal. They show how finance turns belief into numbers. A mission becomes a valuation, a brand becomes a demand, a headline becomes a first day pop. Excitement becomes a market price. So the next time a famous IPO appears on your app, pause for a second. Ask who had access before you. Ask what price they paid. Ask whether you're seeing the start of the story or the public version after years of private growth. Because an IPO isn't always the starting line. Sometimes it's where the crowd is finally allowed into the stadium. And by then, the first lap may already be over.